Hello everyone and welcome back to our channel Zenith Academy Online. I am Shahana and today we are going to discuss a very important yet a very day-to-day concept, which is GST. Didn't you notice that while going to buy a t-shirt or while going to a salon for a haircut was costing you a tax? Why? Let's find out. Now first we need to know what is tax. See, we know each country has its own government and government needs funds to run the country. But why do government needs fund? See, government needs funds to build roads, infrastructure, to develop and maintain educational institutions, to develop hospitals for the welfare of the public, and many other services and many other schemes it launches for the welfare of the public. So how do government acquire these funds? So for that, it charges tax from people in form of revenue, and that is where it acquires its funds. So basically, tax is an amount or revenue collected by government from its people for administrative expenses, development and welfare schemes, etc. Government charges this tax either on the income or expense of the public. Yes, expense also. How? Let's see. Types of taxes in India. This will explain the question how government charges tax on income as well as expenses also. See, there are two types of taxes in India: direct taxes and indirect taxes. So direct taxes are charged directly on the income of the people. Okay, so it is direct taxes are those that are levied on the income of individuals or organizations such as companies. They include income tax and corporate tax. They are set direct taxes also. Why? Because see, there is no middleman in between government and the people. People directly deposit it to the government. In indirect tax, those taxes that are paid by consumers or organizations when they buy goods or services or both. See, this explains a question how it is levied on the expense whenever we go to buy anything like a t-shirt, for example, or whenever we hire a service like going to a salon. Whenever we pay for that service or for any of the expenditure, we are actually paying a certain percentage of that expense as a tax, and that tax is deposited by that shopkeeper or that service provider to the government. We are not directly depositing it to the government, and hence this tax is known as the indirect tax, because in between government and people there is a middleman like a shopkeeper or a service provider who on behalf of the customer is depositing it to the government. Okay. Now, how are indirect taxes levied? Since in this video we are talking about GST, we need to learn about indirect taxes and how they are levied. So for that, we need to understand some terms and the concepts. See, in this scene, we are seeing a customer buying clothes from a shopkeeper. She is the customer and let's say she is the dealer. Now, who is the dealer? Dealer is a person who buys goods or services for resale. See, this is the person who in turn is buying goods in bulk from other person so that he can resell it again to the final customer. What is the cost price? It is the price at which a trader buys goods. The cost price is also termed basic price. If we relate in this context, it will be the price at which the dealer has bought these goods for resale. Okay. List price. It is the price at which an article is marked. List price is also known as marked price, printed price, quoted price, etc. Now, for example, whenever we buy any clothes, a tag is there. A tag is stick to the clothes, and that tag indicates the price of the product. That price is known as the marked price or actually the list price. Now, In a general scenario, if we see whenever we go to buy clothes, it is a general tendency that we ask for a discount, or if there are schemes running in the shop, they'll offer us a discount for their maximum sales. So what that discount is in order to sell out the old stock or for any other reason. Okay, like the shopkeeper says, you are our first customer, so on our first sale to you, we'll provide a 10% discount. So this is a discount. A shopkeeper offers certain percentage of the list price as discount. So please remember, discount is always a percentage of the list price. Discount is always calculated on the list price. This discount is always calculated on list price. This is a very important point to remember. Now, what is the selling price? So once we have selected the cloth, we have finalized the discount. So the final price after deducting the discount is what actually the selling price is. Let's read. It is the price at which a trader sells his goods with discount, if any. Selling price is also called sale price. The selling price is equal to list price minus discount. When an article is sold without any discount, so definitely list price will be equal to the selling price. Now, how this indirect tax is levied? So tax is calculated on the sale price. On this sale price, that is the price after discount, tax is calculated on the sale price, that is marked price minus discount, if any. Tax is equals to rate of tax into selling price. Like there is a rate of discount, there is a rate of tax which is actually calculated on the selling price. Discount is calculated on the list price and tax is calculated on the selling price, which is the list price after discount. Okay, let's proceed. Now our main topic, goods and service tax. Here in this scene, the customer is asking why GST is charged in my bill. So what shopkeeper has to say? GST is a consumption based tax. Consumption based tax means for using goods and services. We are consuming these goods and services, or we are buying these goods or services. So GST is a consumption based tax which is levied when one buys or transfers goods or services or both. So the customer asks, how do you calculate GST to be deposited to the government? So the shopkeeper says, GST is calculated on value addition. So this is the basic and the most important concept on which the GST is based, which is GST is always levied on the value addition. I'll tell you with an example. Let's first read it. I pay GST on purchases made by me. So whatever he purchases for resale, he pays GST on that. Purchases made by me of these goods, and then I collect GST on sale of these goods from you. The difference between the GST collected from you, the amount of GST which the customer is paying, and the GST which is paid by this shopkeeper while buying goods for resale. The difference between that is deposited by this shopkeeper to the government. Now how this concept works, let's understand this with an example. Now to first understand this, we first need to identify the actors here. So there will be three actors here. First, the factory or the manufacturer producing the goods. Okay. The second one is the dealer who purchases it from the manufacturer for resale to the customer, and the last one is the customer. Okay, there can be a number of middlemen here instead of one dealer, and a final customer will be there. Let's take an example of a pen. So when manufacturer manufactures this pen, its cost comes out to rupees 500, let's suppose, and when manufacturer, while selling it to the dealer, what it will charge? It will charge this price plus GST at the rate 10%. We are supposing in this example that GST is 10% on this pen. Okay, so what the total price will be? 500 plus GST at the rate 10%. So what is GST? What is 10% on 500? 50 rupees. So our total price will come out to be 500 plus 50, which is equal to 550. Now at this price, that is rupees 550, the manufacturer will sell it to the dealer. Now what important point we need to keep in mind here is, dealer will pay to the manufacturer rupees 550, but what is the actual value of this pen? It is rupees 500 only. 50 rupees is the GST, and this GST is deposited by manufacturer to the government, and it is not kept with the manufacturer. So actual price what the manufacturer is getting is rupees 500 only. Okay, and so this value of pen is always rupees 500 here. Now we proceed further. So cost to the dealer is now 500. Dealer will do what? He will add his own profit and then sell it to the final customer. So he will add this profit, and remember, this profit is always added to the value of this pen, not on the price which is paid by this dealer to the manufacturer. Okay, so it happens to be 500, and let's suppose the profit he added was rupees 30. So the total price comes out to rupees 530. GST is 10%, so 10% of 530 is equal to rupees 53. So we'll add in total price will be total price that is charged from the customer is 530 plus rupees 53, which is equal to 583. Now as we proceed, this will explain how GST is taken only on the value addition. What this dealer is going to pay to the government is rupees 53, that is this amount which is collected from the final customer on the sale, minus rupees 50 which he paid on the purchase of that good, which comes out to rupees 3. So if you see clearly here, this 3 rupees is actually what? 10% of rupees 30. Okay, and what is this rupees 30? This was the value addition by this dealer. You remember the profit we added was rupees 30, and this was the actual value addition by this dealer, and GST was ultimately charged on this value, and hence the only GST paid by him was rupees 3. So this is how the GST mechanism works. So the next question that may come to our mind is, why GST was introduced? So for government, it was the aim, one nation, one tax. One nation, one tax was the aim of the government in implementing GST. Before GST, there were several other taxes like sales tax, VAT, service tax, etc. And there were multiplicity of taxes, and so government introduced one and only one tax to abolish all these other taxes and reduce the multiplicity. To remove complexity of state tax and central taxes. There were, as I told you, there were many taxes like state and central taxes which were having different taxes, and so to remove the complexity, only one tax, that is GST, was introduced. To reduce tax evasion. To minimize physical interface between the taxpayer and the tax authorities, thereby reducing the taxpayer's difficulty. Okay. GST is expected to bring buoyancy to the government revenue by widening the tax base. Also, to remove multiplicity of taxes on some products before introduction of GST, on some products, sales tax was also levied, service tax was also levied, and so there were multiple taxes on one single product, and hence it was creating a lot of complexities. So when GST was introduced, all these taxes were abolished, and hence multiplicity of taxes was removed. Last, to avoid cascading effect, that is double taxation, tax on tax, GST is levied only on value addition, as we learned in our previous slide. See, in our previous slide we saw the example of a pen at rupees 500 by the manufacturer, and he added GST at rupees 50. So the total price paid by the dealer was 550, and what dealer was doing, at this 550 was again the tax charged by him, 10%. So conceptually if we see, this is wrong. Why? Because this 550 includes rupees 50, which is already the tax, and now we are paying tax on tax again. So to remove the cascading effect, GST was introduced. And see, since GST is levied on value addition, there will be no cascading effect here. GST was levied only on 30 rupees. If you remember, GST was only coming out to rupees 3. Okay, this is how the whole mechanism of GST works. Now we have completed the theoretical part of GST. In our other video, we are going to cover the practical aspect, and we are going to solve some sums as well. So stay tuned, keep the learning on, and if you haven't yet subscribed, please do subscribe. Thank you, keep the learning on.